There, but let's focus on a stock that's been surging in trade. Nuvama Wealth is in focus after nearly 6.2% equity changes hands in the block deal window, about 629 rupees a share. We understand that it's Edelweiss Finance and ARM ECAP Equities who are the likely sellers. To get that confirmed, we're now joined by Rashesh Shah, the chairman of Edelweiss Group himself, to discuss the details around this deal itself. Thanks a lot, Rashesh, for joining in. We also have Nimesh with us. But, just one confirmation. The block deal that happened today, who were the participants on that? How much do you sell? And what do you do with that money?
No, as you know, we earlier this was called Edelweiss Wealth Management, which got renamed to Nuvama, and we spun off the business, which was a very unusual deal. But we spun off the business, got it listed. But when we did that, we kept about 14% of the company with Edelweiss for our own needs, because Edelweiss also has investment need. We have some borrowings. So this, whatever the 14% was held, approximately half of that, at least actually slightly under half of that, is what we have sold today. Morning. This stock, Nuvama, got listed a year ago. So we had a 1-year lock-in on the shares. So that got over. And as you know, we in Edelweiss are making investments in our asset management and insurance businesses. But along with that, we also committed to reducing debt. So we are also paying the debt at the holdco level. So this inflow will also help us reduce our debt.
All right, Rashesh, thanks a lot for joining in. Just give us some further clarity. Edelweiss has raised close to around 1,400 crores. How much of it will be used for debt repayment? How much of it will be used to expand the business? And also, what's the call on the remaining stake? What do you want to do with it?
So we are obviously very bullish on the financialization of household saving opportunity in India, asset management, wealth management. We had always said banks and NBFCs were doing well, housing finance companies were doing well. But I think asset management companies, wealth management, what we call asset light strategies will do well. So we are pretty bullish on the opportunity for this entire wealth management space, also for Nuvama. So we're happy to hold it. We have enough liquidity for our investment needs. So a large part of this, what we liquidated, we'd go towards repayment of debt. We want to be asset light. We want to be low debt. So over the last 4-5 years, as we had a little bit of debt, we've been reducing it. Our overall group debt come down significantly from a peak of close to 50,000. We are now down to 14,000. So just 75% of the group debt in the last 4 years. So we continue on that journey. This amount that has been raised, 1,400 odd crores.
Okay. Rashesh, hi. Good to see you after a long time. Thanks for joining in. You nicely explained as to how this money is going to use the first tranche that you've sold in Nuvama for repaying debt. I know there is a lockup of 75 days to sell further for Edelweiss. Would you be in a hurry to sell the remaining stake, or you want to hold on because Nuvama itself is expected to do well? So my first question is on that. And second, I believe there is a further plan of monetizing your other businesses as well. So first, on the Nuvama remaining stake, what do you plan to do, and how long you want to hold on? And then I'll ask you about the alternatives business as well.
So I think it's a good question. I think our idea was to sell it to good investors. So as you know, the names of the investors come out, you will see that these are very high quality, long only names and all. So that was very important to us. We didn't want to, try and sell it to, maybe a lot of hedge funds and others, the more high frequency investors. So we were very, very particular that we are in no hurry to exit. So I think Nuvama, we are very bullish on the wealth management space, as I said, asset management space. So though we have a 75-day lockup, we are not in any hurry to exit the balance. We will just do it as per that. As you know, Edelweiss as a holding company, as an investment company, we have our own priorities. Our holdco debt was about 8,000 crore. So this reduces it significantly. And we have a lot of other levers. We have quite a few other investments.
Sure.
Our idea is to bring the holdco debt to half, from 8,000 to 4,000. And that is why we have other businesses like mutual fund and alternative asset management, which also we can convert to cash by partial stake sales.
Got that, Rashesh. Now, the other question was on the Edelweiss alternatives. I believe That's the next company where you guys will look to unlock value. What is the kind of stake sale you're looking to dilute by an IPO in Edelweiss Alternatives? And what's the kind of valuation you're looking for? Because it'll have a significant impact on Edelweiss as well. I believe the market is anticipating a value of close to 9 to 10,000 crores. Can you just confirm the same?
It's very hard to confirm because we are still in the process. We have not finalized anything. I think by end of October, we would have finalized, and as and when it's finalized, we'll be very happy to come and give the details.
How much you look to sell? How much you look to sell in the IPO?
So our current plan is to sell 10 to 20%, which is what we have announced, 10 to 20% stake in that particular business. We said we'll raise between 1,000 crore to 2,000 crore and again, as I said, part of a large part of that will go again towards reduction of debt. So I think with the Nuvama stake sale, with the EAAA IPO stakes, where we are now, and that will give us a lot of comfort. That will give a lot of comfort to our stakeholders. Though we have managed our debt very well, as I said, 75% reduction has already happened. We just want to make sure we continue on this path, and we have very good business. As you realize, we had 8 businesses, one out Nuvama, which has done very well as standalone. The remaining 7 businesses, including alt asset management, mutual fund, housing finance, both the insurance businesses, all of them have a lot of future out there. They all, have been growing very well. So we just want to make sure that while we sell some stake, or that we get some liquidity to repay debt, we also ensure these businesses are on a robust growth path.
Got it. Rashesh, we are flashing the details of Edelweiss Financial as well as to what you own in the other businesses like AMC, the 2 insurance businesses, as well as the ARC business. A word on the ARC, Rashesh, because that's been a pain point as far as Edelweiss is concerned. There are some regulatory, concerns as well. RBI has, taken some firm action against the ARC business. How soon that can get resolved, and what's the ultimate plan as far as the ARC business is concerned? Will you look to sell that business in future?
So I wouldn't say ARC is a pain point. It's been a good business for us like every other. What happens, Nimesh, a lot of these are very cyclical, especially ARC is a highly cyclical business. 13, 14, 15, until 18, until 2020, there was a lot of NPAs in the banking sector. We helped recover. We have totally recovered more than 40,000 crores for banks in the ARC business. Obviously, we have earned a fee and an incentive and good return on the capital on that also. But we have also recovered more than 40,000 crores for the banks. We still have about 35,000 crores of AUM. So though we are not acquiring a lot of assets, we continue to recover. And even the RBI order was on acquiring new assets, which anyway, there is not a lot of NPS to acquire out there. So ARC is a 5 to 8 year cycle because it is obviously a business that will have a lot of growth opportunities when there is an NPA buildup in the banking sector. Fortunately, right now, NPAs in banks are low. So we are recovering the old asset we had acquired. We have about, as I said, 35,000 crores of AUM. We are recovering about 9,000 crores every year, if you see that. So we are hands full for the next 3-4 years, focusing on the recovery part of it. On the new asset acquisition, I do think not just us, the entire ARC industry is about 2 to 3 years away. So in a way, the RBI order also has asked us to strengthen our processes and systems and all. And as you know, any business, there is always opportunity. So we are taking this opportunity, working closely with RBI to make sure all the areas that RBI has raised concern, we are strengthening ourselves, and we will make sure that RBI is satisfied with whatever progress that we have to make.
Got that, Rashesh. Before I let you go, Rashesh, while you spoke about value unlocking in the other businesses, I also understand you're in the process of incubating few businesses. Broadly, if you can tell us which are the few areas that you're looking at, and what sort of growth prospects you see for the couple of businesses that you're looking to incubate in future.
So we always look at opportunity, but currently our commitment is, and I can unequivocally state that until we bring down the debt, because even incubating businesses might need small investments, 40, 50 crores, 100 crores, and that has been where Edelweiss has been very good at. Small amount of capital, a lot of effort. We are effort heavy capital, but not capital heavy kind of a company. So we want to make sure that once we bring down the debt to half of where we are now at the holdco level, which we, as I said, we expect to hopefully do that in the next 2 to 3 quarters, is where we start incubating new businesses. We're seeing a lot of opportunities in AI, in financial services, in customer contact center for customer experience, all of that. But we will not do anything until we complete this phase. If you know Edelweiss, I think until last year we were focused on the NBFC and the wholesale asset. We had some stress out there. Once we completed that and got that under control, we said we'll now start working on holdco debt, bring it down to half. That once we do that, then we start working on incubating new businesses and growing in those areas again.
Briefly spoke about the growth potential in the housing finance business itself. The buzzword of the last 1 month was the big housing finance IPO that came in from the house of Bajaj Finance, and also thereafter there were steps that HDFC took to go ahead and unlock value out there. So just wanted your thoughts on the value unlocking potential of your housing finance business. Where do you see growth out here, and do you have an AUM target here?
We don't have an AUM target. In fact, in all our businesses, we always say quality before growth. So we have no growth targets. In fact, any of the CEOs of a business, you speak to them, they will say that we are a very unusual company, that we really don't have any growth targets at all. We have a lot of quality targets internally that we force them to meet. So I think housing finance is a phenomenal opportunity, especially affordable housing, where our housing finance company is. Model of co-lending with banks, partnering with banks. I think there'll be two kinds of housing finance companies that compete with banks, and there are other housing finance companies which will partner with banks. Our model in our housing finance company is going to be to partner with banks, to work closely with banks. So it takes a little bit of more time early on to get the partnership going, to get the linkages going. But I think they both are very good opportunities. You can compete with a bank and build a balance sheet, or you can partner with a bank and come up with win-win opportunities and product in that. That's the one we are following. And as we start scaling that up, we will obviously be happy to come and speak more about that.
Value unlocking when? Next year, the year after that?
Yeah, in about a year. I think housing finance is about to expand.
All right.
I think affordable housing, as you know, the upper end housing has been growing fast. Affordable housing, actual housing growth has been more muted. Underway, and affordable housing finance, I think the next 4 to 5 years, the opportunity looks very, very exciting.
All right, Rashesh have told us what Edelweiss will do with the money that they'll raise from this Nuvama sale that you spoke about. But what about in your personal capacity? You as well have trimmed stake by close to 0.5% in the last few quarters. You hold still close to around 4% stake in the company. What's your plan with the stake you have?
So I think our idea is we are extremely bullish. I mean, as you know, Nuvama was Edelweiss Wealth Management. In fact, if you go back 18 years ago, that was Edelweiss, the capital markets business. On the opportunity, it's a great management team. I have the highest degree of confidence in that. And our idea would be to continue to be, invested. We have all sold a little bit because we all make other investments and all that. Instead of that, we have no desire to, exit in a hurry or any need to exit in a hurry. We are investors. We are believers of the opportunity, and we will, like as you saw, even Edelweiss today. I mean, when we did the block today, we had announced it at a 5% discount to the closing price, but we ended up closing it at 1% discount. If we had gone at 5% discount, we would have sold a much larger amount of number of shares, but we decided that instead of 5%, we will stick to 1% and only get very quality investors. So we are very, very particular. And as I think all of us strongly believe in the asset management.
You did allude to quality investors, Rashesh. Could you give us a sense of who were the other side of the trade? We know that you've sold quality investors. If you could give us a few names.
Give us a sneak peek.
I think they will come in the next half an hour or so. I myself, in fact, I was in a meeting and I came onto this interview immediately after that. But in the coming half an hour, I think all the names will be reported.
So let me give a hint. Because the deal happened in the block window, has to be institutional investors.
Yes.
I understand a couple of large FIs have bought into today's block, and some domestic mutual funds could also be there. So it's a very strong book, as Rashesh pointed out. Because they did in the block window, the demand was strong. They didn't want any leakage. So, and of course, the block window is only for institutions, right? So it's largely to the larger FIs and some domestic
So
mutual funds.
Rashesh, Nimesh, as always, is on top of it. He's given us a sneak peek. In the next 30 minutes, we'll have the official names.
Rashesh was in the meeting. Nimesh was, dialing all those guys and said, oh, who are the ones who won?
Okay. Yeah. All right, Rashesh, before we let you go, we are following the fitness mantra, as you always tell us. Life is about the marathon, building businesses as well as like a marathon. But tell us your view on capital allocation as of now. The markets are red hot. What's your view right now? A lot of investors will be looking for advice. Asset allocation, how much to equities, real estate and gold, any other asset classes? Well, your quick take.
Yeah, I personally think things like gold and real estate are more emotional kind of assets depending on people's comfort. But I think the larger opportunity is equity versus debt. I do think that the bond market, debt, government securities, as RBI starts cutting rates, will also be a great opportunity. Equities obviously have done phenomenally well. So I would currently recommend about 50 to 60 equity and about 40 to 50 good to play the interest rate reduction cycle. I think the next year there is going to be a come down and there'll be a fair amount of yield as well as capital gains in the bonds also that will be available.
Right. 50 to 60% equity and 40 to 50% debt. That's quite a shift from higher proportion towards equity. Understandable given the sort of run that we've seen in the markets as well. Always a pleasure speaking with you, Rashesh, on a whole host of things. Edelweiss fitness, Edelweiss 2.0, so to say, and the markets itself. Thank you so much for joining in.
Thank you.
We leave you with the promise of you joining us later as well.
Sure. Thank you, all of you. Bye.